Welcome to a weekend stock talk. Today is June 17th at 12:09 a.m. Eastern Time. Sorry for the yellowish tint on the background, but thank you everyone who commented on my videos in the past, including the live stream as well as the Thursday stock talk. I'm going to keep this video as short and succinct as possible, under 20 minutes if possible. So let's get to SPY, the S&P 500 on the 180-day chart using the Thinkorswim platform. So here we are. We're looking at the 180-day chart, and we know that there has been resistance at 280, signified by this light blue line. Looking at more the 5-day, 5-minute chart, we see that this boxed area, or the 279.50, has actively acted as a what? As a resistance. So we give what the markets are telling us, that this is the resistance, close enough to 280, and we said that what? In previous stock talks, that we are not just going to waltz over 280 like it's nothing, because on the 1-year chart, we know that 280 is a very important mark. Why is that? It's because it's functioning as resistance here, as well as a gap down area here. So we actually talked about how on Thursday, intraday, while I did the live stream, why even if the markets were pulling higher, this is the resistance. If we can't get over this resistance, chances are the markets are either going to consolidate sideways or it's going to fall. So we talked about that. If the markets are falling, what is our trading strategy? Well, the trading strategy is to buy when it's starting to find a bottom. So where is that bottom? So we talked about what? Even though the SPY is curving down, you guys can see that we're getting rejected at the what? The light blue line, or the 20 EMA on the 180-day chart. We're on the decline. But where can we find some support? Well, one reasonable support could be right here, right now. Look at this boxed area, right? This massive boxed area. I'm going to zoom out. Look at this massive boxed area right here. What was that representation of? That's a representation of the possible support that SPY has, right? And that range is from 274.50 up to 275.50. That's pretty much a $1 range. Now you might be asking, why is that a large range? Well, it's because you can see that the orange line there, the 150 SMA, has functioned as a support in the past, and therefore we expect this area to function as a support, as well as this was the previous resistance. So in fact, if we can hold above this area, the market is still extremely bullish, and this is nothing but just a normal pullback after a massive bull flag run, right? And if we can just pull down even a little further, you know where your entry is. Your entry into the markets is wherever near this box area, right? Right when we start bottoming out at this area, I would start adding shares into the markets. So those tickers, be on the lookout for those for good entry points. All right, so this is obviously a bull flag pattern, and this is just a continuation, in my opinion, on the way back up to break over where? Break over 280 to head to 282. Doesn't have to happen, in the next few days, but certainly I'm looking for some sort of reversal next week. So that's SPY. Let's take a look at TVIX, which tracks volatility on the 180-day chart. So here's volatility, right? We talked about how it's been falling, but all of a sudden we have this recovery in the past day. So TVIX went up 1.92%. Obviously not as much. You expect it to go a little higher, right? You can see that the markets, Dow Jones fell over 84 points, around 84 points, but volatility only went up 1.92%. Once again, what does it show us? Here's the light blue line getting rejected at the 20 EMA. So once, or if and when the market does start to reverse, we expect volatility to continue to fall. We're making 180-day lows. You can see that we hit $38.20. Looking at the 1-day, 1-minute chart, right? Even though the markets were falling, look at what volatility was doing. It ended up kind of just edging downwards. So that is something just to be cautious about as we move forward. All right, something very interesting. I think you guys are all commenting about this. /CL tracking crude oil futures on the 180-day chart. What exactly happened? So on the 180-day chart, we see that it climbed over the resistance area. However, it got a massive rejection on Friday. So where did we fall to? We fell basically right back to the support. So looking at this long term, we want to take a perspective on, we fell back to the support area, and this support area was what? Well, this is when we started, kept edging higher, right? This is where we kept edging higher. This functioned as a support here, and now we're falling this way. So I want to show you guys just, the larger perspective on the 3-year chart, right? Right now, surely it does not look that great for crude oil on the 3-year chart. We've broken a major support, and it seems like on the weekly, chart candles that we've broken under the 20 EMA. So this doesn't look too good for crude oil. However, I want to show you guys a couple of more charts. SPSIOP, which tracks oil and gas exploration. If one looks at this chart, what would you see? Right? Something like this looks pretty much like a normal consolidation for another push upwards in the next few weeks. Obviously, this is not something that we feel like it's going to develop, very soon, but it could potentially start pulling higher. Of course, this is exploration, so to keep that one in mind, because exploration follows Gush, G-U-S-H, generally speaking. Of course, it also follows crude oil a little bit as well. But so we're seeing this trend. Where did we fall here when we started, kind of coming down after this massive surge up? We fell to the blue line, or the 50 SMA. Of course, the 50 SMA is still quite a ways away, but you can imagine if we started falling to 59.27, we can still say we're bullish because what? We're forming some sort of bull flag pattern, right? Even if we have a surge up followed by a down move, we can still have an up move on crude oil. So how do we play crude oil right now? In my opinion, if you guys are in Gush, looking at Gush on the 3-year chart, right, this pretty much looks similar in that we're back at the support at 33.24, and this is a pretty dangerous area. So I would wait. If you want to gather in some shares on Gush, I think that is okay, but I would wait for some sort of reversal pattern, perhaps a long tail candle, some sort of reversal pattern that we are going to, the support will hold at the very least, because you can imagine how this could be a bull flag pattern, but we need this support to hold, or if not, we need to edge it down, but on a weekly close above 33.65. All right, let's look at natural gas. Wow, look at natural gas, right? Look at the 180-day chart. We've talked about natural gas. Higher highs, higher lows, a consolidation pattern. What was this pattern? Well, it's another bull flag pattern, right? We have a surge up, consolidation. All of a sudden, we're breaking the resistance and we're going higher. So there you go, right? Look at the 1-year chart. Pretty darn eminent that we are breaking out again. And this is great because the ticker UGAZ, which follows natural gas, here we are on the 1-year chart. Why is this so great? Actually, when I look at the 180-day chart, this is really great because we talked about how that if we started breaking this resistance, right? Especially this resistance at 68.65, there's potential for Gush to get to $77. There's not that much resistance from now to $77, especially since we're on a breakout trajectory. Once again, natural gas continues to be a good play, in my opinion. And we talked about how don't go into DGAZ, right? We talked about how this 20 EMA is now acting as a support. Look at the more near term, the past few days. 20 EMA has been acting as a support. Do not go into DGAZ, because DGAZ, you can imagine, is in a bear flag pattern. Look at this pattern right here. Pull, consolidation, downwards. You can see that we're in a descending triangle formation, and therefore that is not something we would actively invest in. Looking at /GC or gold futures, wow, look at gold futures, right? We said that it tested the top. We said that it was making higher lows, and all of a sudden, Friday, we had some massive movement in commodities. Gold plummeted below its support, and this just basically confirms the major 180-day trend that we are still making lower highs. Every time we made a lower high, we seem to get rejected, and gold is continuing to fall. So where's the support for gold? Well, in my opinion, gold has a clearly defined support at 1270. Look at how it's functioning as support here. So where are we right now? We're at 1270, 1282 actually. There's still a little bit of room for gold to fall. Does that mean you need to go into JDST? JDST, so looking at this, right, would you want to go into JDST, right? The answer is probably no, even though we feel that gold could fall a little more, but how much more can JDST continue to go higher? If you really wanted to go in, you're at the resistance area, so just keep that in mind if you want to go into JDST. Of course, JNUG, until gold finds a bottom, I would not go into JNUG right now, especially as, you can see that we've kind of broken down below this support area. So this is just something for you guys to watch, but not actively participate in my opinion, because it's all right. So let's get to a couple of tickers. The first one I want to take a look at is actually, of course, what? Tesla. So I want to take you a look at Tesla because this is a ticker that we've been watching, actively watching for the past few weeks or days. So you can see that Tesla has this, bull flag pattern on the weekly chart. This is actually a 3-year chart right here, weekly candles, and we see that the last week, where did we close? 358. What was the breakout number that we were looking for? 330. So we broke out of 330. We're now at 358. This looks like a clear-cut breakout signal. So Tesla certainly has the potential, in my opinion, to pull to 400, 450, possibly even higher, given the length of time we consolidated at this area. We consolidated this area for a period of approximately 1 year. So given that this was 1 year and that the pull was around half year, this is a pretty bullish sign for Tesla. So I'm expecting higher prices to come, especially when the markets do reverse, in my opinion, in the near future. All right, so that's Tesla, and I will just quickly glance at AMD. This is, you guys can see AMD on the 3-year chart. We're looking at the same pattern. We got a pull followed by a consolidation flag pattern, and we broke out. And look at where we are now, 1634. My goodness, who would have imagined that when AMD fell below $10, that the potential for 1634 could come a few weeks after? I don't think many people would have predicted that, but now you can see that's happening. Tesla, perhaps something similar emerging here. All right, I'm going to read just a couple of comments from you guys. So thank you everyone for all of your comments. I'm trying to catch up with all those comments and everything. So let me refresh back to my comments here from the live stream. So I see you guys commenting from the live stream. So we got Bim saying, hey, I'm glad you subscribed, or you're subscribed and like your style. Looking forward to watching your channel. Thank you so much. All right, EJ Song. Wow, live stream, I love it. Kevin, can you cover AMAT and SGH? So I'll cover the first one that you announced, AMAT. So here it is, AMAT, and we're looking, and we actually looked at this in the past. One thing to note is we saw that it's making lower highs, right? I actually made this trajectory back down, and you guys can see that it was making lower highs, lower lows at the same time. It was getting rejected at every point. We got rejected here, rejected at the blue line, 50 SMA, re-rejected at 50 SMA, and we're continuing down. So this is a pattern of active decline. We're making a descending triangle formulation. One can argue that, yes, this is the support, but you can imagine how long is this support going to hold. No one really knows. You guys can see that we're getting squeezed in by this descending triangle. At some point, we expect a possible break downwards. So just be cautious on this one. This is not something I would actively invest in, as this is still falling, not following. All right, that way, hey, hi Kevin, thanks a lot for your video. I didn't go for IQ, but I went to BILI. What do you think of that one? So let's take a look at BILI. So here's BILI, very interesting trend. I see what you're saying in terms of, this kind of looks like IQ, and we talked about IQ in the past. Here's the 180-day chart. So one thing to note is BILI does have a similar trajectory to IQ. At the same time, just note that, we did come down this time back to the 20 EMA, and this pattern looks like what pattern in the past? Well, it kind of looks like this pattern, right? And look at what happened. We came to the 20 EMA, rebounced up, came down, confirmed it at the what? The 50 SMA, and then for it to come up. So you could take a small position here, but just note that it might take a couple of days for you potentially to get your money back. Perhaps if you get to the 50 SMA, that might be a little safer. That is a judgment call for you to make. You could give it a few days, but I would, you can dip your toes into this one, but just know that this one also moves very quickly, down 4.15% at least on Friday. So your entry positions, 50 SMA, or pretty much right now just as a starter entry position. Okay, Coolio, I was talking about IQ when it was $17 a few days back. I sold at $22. I know, IQ is moving very quickly. Okay, so, and then you need a Twitter account or another social media where we can reach you just in case YouTube starts failing. I will try to get that up and running in terms of a Twitter or another social media account, especially as the course is being rolled out in the future. So once that gets started, then look for that to happen. All right, let's take a look at some other tickers that you guys are calling out. Thank you, Todd, IS02UB, Rizwan, ticker KR, Kroger. Thinks this is a good one for Monday. Okay, so let's take a look at Kroger really quick. And we see that Kroger, certainly a good pattern, right? We have a very stable support here, plus we've been kind of steadily trending higher. So one thing to note is you can see that this is the resistance, right? this would be the resistance, as this is the gap down area. So ask yourself, what's the potential for profit right now? So certainly the potential for profit is there. I think if you're willing to be a little more patient, because this one moves a little slower, there's 3 to 4% profit, especially as we get near. If you get that 3%, 3.5% edge, I would start selling my position, because you can imagine this is a support. We're on a descending trajectory, even though we've kind of pulled a little higher. If we do get above the support, it's almost a way of how do we get above the support. In order to get above the support, you can imagine there's like two scenarios. One, kind of gap up pre-market so that the markets don't have a time to start trading in that area. And second, we have to have a massive surge up. So during market trading, which is hard to see at least right now, given. So you know, this one can almost argue that this is a bear flag formation. So this is another reason to be cautious, right? Decline, bear flag, another decline. You know, that's a question mark for, you know, if you're in Kroger. So just be careful if you're in this one. Yep, there you go. All right, Raymond, can you look at Ally? It looks like it's potential for bull flag breakout. So let's take a look at ALLY. And all right, so we're looking at the 1-year chart. Let's just quickly glance at the 3-year chart. All right, so very nice pattern. I like it. So one thing to note is we have this stretch, right? And you said this is a bull flag formation. I can kind of agree that this is a bull flag, but this flag is actually very slim. And right now, there's no breakout trajectory right now. There's no sign of a breakout right now, right? We don't have a break over this resistance area. So we can still see this can still possibly come down, retest the flag, and then come back up. So where's the safer play right now? The safer play would be near the bottom of the flag, around $24.90, around $24. That would be the safer area, I think, or $25, 25 and change. Right now, it is currently $26.41. It's okay, but once again, we don't want to guess where the breakout is happening. You can see, like, there's no breakout happening right now. The most likely scenario right now is for it to still arch downwards and continue the flag pattern. All right, so be a little patient with that one, but I like what you're saying. Simon, can you look at VSLR? I entered at $4.80. Okay, so VSLR. So VSLR, interesting pattern. Let's take a look at the 3-year chart. So, okay, $4.80 you're looking at right here. So one thing to note is, yes, we broke above this resistance area, but the next resistance is a stellar 577. So you probably have another 50 cents to go, but note that people will start selling as we near the previous resistance. So, you know, just be, again, this one is just one to be careful, because if it does start declining, look at this, right? 1 week push, another week push, second week we started edging and we couldn't hold it and we started to fall. It looks like this one does move a little slower than what we expect, so I think you'll have a little bit of time to get out should we start forming a red candle. But if you guys want to participate in this one right now, you know, it's certainly a possible one, but it's just one thing, as you just can see that why, right? Look at this massive decline, and all of a sudden this is like almost just a small pop. Small pop. It's like a dead cat bounce almost. But you know, if you really want to play this one, then there's a potential for it to get up here. But just manage your loss, manage your risk on this one, because it's not a good, very good pattern. All right. Okay, I want to talk a little bit about Gush, and this will be the last one that I talk about today. So you guys are talking about just got stomped out of Gush. Was going to ask you a good time to sell as I was bag holding Gush. No need to ask that question now. Another question was by Lucas: is crude oil still bullish? Down 12%. All that and more. So here's my opinion on crude oil. I know you guys have talked about a ton of crude oil right now because, you know, Prashant, I hope I said your name right, you talked about Gush exhibiting a descending triangle. So it all depends on what perspective you're looking at right now. So I want to show you guys Gush again, right? Here's Gush. If you're looking at the 3-year chart, right, which is the more definitive chart in my opinion, you can see that we have a push followed by a kind of a flag. This flag can take another week. It can take 2 weeks, 3 weeks. You know, this can be a while until we have another breakout, potential breakout. So how do you play Gush? Well, obviously $34 is pretty low. So I think if you take an entry position, take your, dip in your feet a little bit here. If you're willing to risk that 5 to 8% on your account, whatever chunk that you invested in, I think that's a good risk to reward ratio because, there's potential for it to go higher. But at the same time, just note that, even this can take a while. So it could still come down. It could come down to where? it could come down to, it could certainly, we're looking at this one as, it can certainly come down to here as well, right? Around this area right here. So 28.45, like that's a lot of change. So just be careful, but we do expect that this area, 33.58, will function as a strong support. So I'm looking for this support to, at the very least, start holding, at least on a weekly close. So that's what I'm looking at for crude oil. I know you guys might have stop lost out of Gush, but I didn't really, actually added more to my position, like some of you guys actually said, around $35, $34, and I potentially will add quite a little bit more if it does start dipping a little more. So what's really will be interesting, in my opinion, is what happens on Monday. Will this support start holding again, and we'll see buyers again into Gush, or will we start to decline back to this, this major support? This is the major support for the more bullish stance for crude oil. So I hope this helps. Thank you very much for watching this video, and yeah, I will see you guys Monday for the Stock Talk video then, and until then, I'll see you guys later, and happy trading.